All right, ladies and gentlemen, well, welcome to this week's session, the Wilson Weekly with Graeme, Holm and Dr. Wilson. And as you can see, it's a casual day for myself today. And actually, Doc, no suit jacket today.
No, we're in the northern climes, Graeme, which means QLD, your land. So I thought we'd couldn't be bothered bringing the suit coat. And so I've still got my coat, my tie, and my tie bar, if you notice.
I was going to say, Doc, maybe by the end of the year, I might be able to get the tie off you as well and have you like in the relaxed Economist look.
Well, that's true. We could think about a new persona. Economists aren't noted for their glitz and glamour, I suppose. So we could think about another uniform. But I'll certainly feel naked without my tie bar.
I was going to say we might all Infinity fan that tune in every week in the comments section. Let's maybe. So got the barefoot investor and the money mentor. Maybe we can come up with the exuberant economist, or we can come up with a new name for Doc, eh? Might go viral.
Yes, it could go viral, but it is interesting, not seeing myself in a suit, but things change, and maybe it's a midlife crisis I'm going through, Graeme. Who knows? But, no suit. But I'm feeling pretty good, and more good news on the property market, particularly for investors this week. Not so good for tenants. We've got the latest rent report, Graeme, which we'll go through to start with. We've got some interesting news also, which might be worth having a chat about regarding some of these rent freeze policies that are proving to be quite popular around the globe. And we've got one that's some interesting news out of Scotland, Graeme.
Okay.
Regarding a rent freeze policy that was instituted there over a year ago. So it was early days in terms of this type of policy by the previous government that's bitten the dust. And perhaps its rent freeze policy was one of the reasons, but nonetheless, there's some very interesting outcomes in terms of that rent freeze policy, which is along the lines that we've sort of been discussing, that they're now abandoning it because it's actually proving to be a bigger problem or causing more problems than it's curing. And this is something that's evolved over the last 12 months. So we can talk about that when we look at the latest rent report, which is, as I said, good news for landlords, not so good news for tenants again.
Look forward to that for sure. And Doc, I'm a bit confused. We had 6 or 7 months of consistent growth, and most of the capital cities are back above where they were this time last year.
Yes.
I keep reading, I've just restructured some of my portfolio, and I read some valuations, and a couple of them I got done different valuations with different lenders. Some of them were like $150,000 apart, and talking about market downturns. And then I went and did the research. I'm like, the market's grown about 20% in the suburb. Yet they're talking about a market downturn, one of the values. And if I went with that bank, I'm 150 grand of cash I've got to tip in. And I don't know where they're getting these university degrees and these qualifications, but you can't say the market's going down almost anywhere.
No, it's not. And one of the problems that valuers have, Graeme, is that the data they use is backward-looking data, because they have to look at sales that are reported officially. And, there's a lag between the sale and when it's actually reported officially, and the valuers can then use it as part of their models to determine what the values are. So we know that the market's clearly picked up over the last 6 months. The national market has increased over national house prices and unit prices have increased over 6 consecutive months, Graeme, and that's the rolling quarterly data. That's quite a robust model. And we're now, as you said correctly, most capital cities are now higher than where they were a year ago, particularly the big markets, Melbourne and Sydney. And we're now within yelling distance, spitting distance, whatever you want to call it, of record high prices. So within a month or two, the data on current trends, particularly given the spring selling season coming up, will show us having reached peak prices in a number of the capital city markets, particularly Sydney and Melbourne, which are just under 2% lower than where they were at their previous peaks, right? Which was March last year. March in Sydney, April in Melbourne. So we're really closing in on that, and that'll mean that homeowners generally will have record high prices. So it's this isn't the circumstance. This is a fully recovered market. Once we do get back to those prices of March and April last year, we will have a fully recovered market and growth to follow from there. Given, as we've discussed, all those demand being well ahead of supply.
Well, let's not take your word or my word for it, Doc. Let's have a look at the data so that your words have some context and some scientific evidence behind them, because, I'm frustrated at the moment. We're hearing less of the, sky is falling in the media. I mean, I think Westpac's Economist just come out and said they expect 10+% growth in Sydney this year. I mean, easy to agree to that now when we're already at about 6 or 7 or 8. Like,
at 8, yeah. It's like, well, that's
we might go 2% in 5 or 6 months.
Yeah, with the spring selling season coming and back-to-back interest rate pauses. Geez, that's a gutsy call, Graeme. That's a very gutsy call.
I mean, that's probably about a 90% chance of a win on that call. It's a very big forecast.
I think they got better than those chances. But anyway, we'll see. But it's certainly, amusing given what their forecasts were last year and the year before and the year before that. So they're just another one of, I guess, those that got it wrong, significantly got wrong their forecasts for house prices. And, they'll probably be a lot closer to what'll actually happen this time, Graeme. So I guess you get it right eventually.
Absolutely. All right, well, we'll rip into the data and let's hopefully for those of you tuning in on YouTube, I know a lot of you are Spotify and podcast and all that sort of jazz, but hopefully the ones on YouTube, hopefully the data helps as we go through it each week on screen. So over to you, Doc.
Yeah, thanks, Graeme. And look, the whole purpose here is to inform the viewers. It's about making informed decisions, property decisions. The data we use is the latest data. It's modelled appropriately, so it's not overly volatile. It's not volatile per se. So you can rely on this data when you're using it as part of your decision-making tool set. And that's what we intend to do here, Graeme. It's to produce the data, robust, reliable data, real-time data, and then contextualise it in terms of commentary. So that's what My Housing Market and through Infinity our purpose is. So what we have got this week, are you excited, Graeme? Drum roll is
always
the latest home rent report.
If I'm a tenant, I probably don't want the drum roll. I've got a bit of Sydney rents for houses and units were sitting at about $750 a month ago, maybe on average. Yep. Are you telling me they're above that $750 now?
Well, for houses, they are, Graeme. A little bit of relief coming through for units, but we're picking up house rents on the rise again. So the big picture really is that after a period of easier rent increases, certainly flatter rents over June, which isn't a surprise because June is holiday month, and typically we see a distracted rental market through June with vacancy rates a little higher and rents not rising at the rates we saw in previous months, and that happened in June. But once the holiday distractions are over, Graeme, back up and running again, and of course this is what happened over July, that home rents resumed their upward trajectory following June, and with most capitals reporting higher weekly house rents compared to the previous month. And again, that just reflects that chronic undersupply of rental property which characterises the Australian housing market. And of course, we're not alone, as we alluded to. Other similar jurisdictions, similar housing markets in other countries are experiencing the same issues and are trying to address that with various policy positions, which, as we discussed briefly before, Graeme, in the case of Scotland, are not proving to be as successful as was hoped. And once we go through the figures here, I'll have a quick chat about that. So let's have a look what happened over July in terms of house rents. We saw a big rise in Sydney houses, as you alluded to, Graeme, up by 2.3%. Sydney house rents are now just under $770 a week. That's a big number, Graeme, for a weekly median house rent.
Yes.
Melbourne also up 1.3%. Interesting that Melbourne is still tracking around about $200 a week less than that Sydney house rental. Melbourne incomes aren't that dissimilar to Sydney incomes, but certainly rents in Melbourne are a lot cheaper for houses.
Just the temperature that's substantially lower in Melbourne.
Yeah, well, I don't know whether that's aiding rents for houses, but certainly they're on the rise. That market's been heating up for a while, Graeme, that Melbourne house rental market. Brisbane was flat, but still at $580 a week. Adelaide up 1.8%, Perth flat, Hobart up 1.9%, Darwin up 2.3%, and Canberra flat. So the monthly increases in rents by and large resumed over July. A couple of steady results there, Brisbane, Perth and Canberra, but other capital cities all on the rise. And when we look at what's happened over the past year, Graeme, you can see Melbourne house rents up 17.6%, and that's the second best performer behind Perth, where rents are up 18.8%, Sydney house rents up 15%. These are big numbers, Graeme, and certainly helping landlords to offset the increase in mortgage payments through higher interest rates for those landlords that have them, and other increases in costs over the past year with those higher rents. Those vacancy rate numbers, Graeme, are still crazy, very, very low. Most vacancy rates are under 1%. Can you believe that? And Canberra's the only unit market with even at 1.5%, that vacancy rate is still certainly well in favour of landlords, and reflects even in Canberra shortage of properties. And you can see the vacancy rates were overall flat or falling, with the exception of Darwin, where vacancy rates were up over the month. But again, that just shows that petering out of the impact of June, where we did see vacancy rates on the rise. Unit rents, Graeme, Sydney's eased a little bit with their unit rents over the last couple of months. They're now down to 720, still a high rent, obviously.
This is units, sorry, Doc?
These are units, yeah, and that was down another 1% over the month. So some better news there for unit renters in Sydney, but still a very high number. And perhaps this is now the squeeze that the tenants are finding with higher rents. They just can't afford it in the shorter term to keep pushing these rents up at high levels. But certainly Melbourne, again, similar to houses, up 1.4%. Brisbane house unit rents are continuing to rise, 2.1% increase, Graeme, over the month. Adelaide flat, Perth flat. Of course, they're smaller unit markets, as is Hobart, down by 2.2%. And Darwin down by 2.9%, Canberra flat. Over the past year, still some, horrifically large numbers there from the tenant's point of view in terms of increases in rents. Sydney unit rents up 30%, Graeme, over the past year. Melbourne unit rents up 32%. Brisbane unit rents up 26.4%. We know there's some COVID effects in the Melbourne and Sydney markets that have meant that they came from a low base over the past year. The Brisbane market's been unavoidably driven by high levels of demand coming into southeast Queensland.
Sorry, Doc. My screen's still frozen on houses, I think.
Oops.
While you were talking about units there.
Yeah, what we've done, sorry, mate.
You're
right. Is we haven't flipped through the slide. Yeah, so there we go. So all that I've just said about units, just everybody take note. Again, Sydney unit rents down 1%, Melbourne, Brisbane up, Hobart and Darwin, smaller markets down, and rises over the past year still very, very strong. Vacancy rates similar to houses, quite low except for Hobart, 2.2%.
That's insane. You exclude Hobart, Darwin and Canberra being those smaller markets there, Doc.
Well,
Sydney, Melbourne, Brisbane, Adelaide, it's 30s, 32, 26, 15, 12, 22. They're phenomenal. That's
big increases, Graeme. And as I said, it's assisted the offset of those higher interest rates and mortgage payments. Mixed results there in terms of vacancy rates. most of the bigger unit markets were flat, with vacancy rates falling in Sydney. Brisbane vacancy rates up a touch to 0.9%. But the point is, Graeme, these vacancy rates can shift by 0.1, 0.2% over a month, but they're still very, very low. There's really nothing that's signalling any relief for tenants in terms of a shortage of properties. Now, as a bit of a giveaway show bag for our viewers, if they have their cameras ready, they can take a picture of that QR code, and that will give them the full July rent report that they can download. So perhaps we'll leave that on the screen just for a second or two, Graeme.
Yeah,
I did mention the issue with Scott. So there's no real good news there for tenants overall in terms of the July rent report. After just some early signs of easing over June, we can now confirm that was seasonal effects. June seasonal effect, which we see every year because it is a holiday month, is now largely washed through the system, and we're back up to higher rents again. So no relief in sight. We've had various, discussions. Governments are discussing how they can tackle this chronic shortage of rental properties, Graeme. Of course, the favourite, particularly amongst the left of centre type parties and groups, is a rent freeze, which seems to make sense, I suppose. Looking after the tenant, freezing the rents, not so good news for landlords, of course, because if their incomes are frozen, well, what happens to when they have to pay higher mortgage rates and extra taxes and fees that are being thrust at them from various governments? So as I mentioned, Graeme, a year ago, the Scottish Government entered into a rent freeze. This was heavily supported by the Greens, and it was a left-of-centre government there, the previous government in Scotland. That's now being unwound at a rate of knots. It's found to cause more problems than it's solved. What we've seen is that even tenants are saying this particular policy hasn't worked. What they're seeing is actually fewer rental properties in the market now, that landlords are shifting out of the rental market, certainly the permanent rental market, moving into more of a part-time rental market. It's not increasing sales at all because, similar to Australia, of course, Scotland is having higher mortgage payments, higher interest rates. And the other thing that tenants are finding is that because landlords can't cover their costs, that they're less inclined to do the little bits and pieces for the tenant in terms of repair and maintenance, and the tenants are fearful of, putting the landlord offside, so they're saying, no, this hasn't worked either. And I thought it was interesting that the Greens were asked to comment on this, on these issues that are obviously not working now, and the new government now is winding this back because it's actually causing more shortages rather than causing, easing the market. And apparently there are now significant legal actions against the Greens, so they're not prepared to comment on this because they're now going before the courts because of what's believed to be this process of restricting income without due recourse to what's happening on the cost side of the equation. So I thought that was quite interesting. Have a look at that one, viewers, to see what's happening there. But it just shows you that in a real environment, in other words, this has actually happened rather than just speculation. This may happen or may not happen. We can actually look at a model that has occurred over the past year in Scotland and look at just the negative outcomes that this has occurred. But I did think it was interesting, Graeme, that the Greens are now facing legal action, which it's obviously of some concern to them because they're not prepared to comment.
The law of unintended consequences, as you frequently say, Doc, and you can't have rates and life and inflation and labour and repair. You can't have everything go up and say, oh, the poor tenant, that we just look after the poor tenant. That's not how the world works. Everybody pays their way.
And tenants are also saying, no, this isn't working. You've got to find something else because they're finding that their relationship with the landlord has become, tenuous, fragile, and they're just sitting worrying about not being able to get their leases renewed when it comes time to renew their leases. And then there's
going to be a huge jump if it's a different tenant or under the legislations or once a year and all this nonsense because if you're not allowed to play with it again, you've got to try to overcompensate and recoup before you can again. It's fraught with danger.
And it undermines the relationship between the landlord and the tenant.
Yeah, massively.
Which is very important. And landlords aren't all, sort of pillaging their tenants. They want to have a good tenant, a long-term tenant, and have a good relationship. And this just sullies the waters. And it's just this Fruit Loop political, environment that we're finding ourselves thrust into with simplistic answers to complex questions when, the real, answer to all of this, the solution is build more houses and more units, and we should be finding a way to sort of do that really,
absolutely,
expeditiously rather than, these market manipulation environments which just create, these significant disruptions which are more difficult to unwind than the original problem. And as I said, if landlords start moving into short-term accommodation and then, tenants have to look at short-term accommodation, that's even worse for the tenant, going forward.
Absolutely.
So home building approvals, Graeme, we had the latest data out. Similarly to, I guess, the rental market, we saw actually that again. I'll just go back to that previous slide. So that home building approvals after a big rise. Remember last month we had a really big rise in home building approvals, and that was courtesy of a big jump in New South Wales, in Sydney. There was a very large unit development that came through, and that acted to push the numbers up. Over 4,000 units approved in the month. So it's a big approval there over May. But we're back to normal with approvals down 7.7% over June. And, of course, no surprise that units fell 21% over the month and houses down 1.3%. And following that very sharp increase over May, we saw New South Wales down by 44%. And annual growth levels still remain depressed. So speaking about building more houses, more units, Graeme, there's no sign of that happening. When we look at the chart, you can see that continuing downward trend following that big that blip upwards we had last month. We're back to flattening the trend, and you can see how that trend has really fallen away for new home building. So no replacements on the horizon there. And right across the board here, you can see declines for houses, units, and the totals over the month. Overall, homes down 10.1% over the month. And when we look at the year so far, that's the 6 months to June versus the 6 months to June last year. And big falls, and similarly big falls for both houses, units, and the total over the full year to June this year versus the full year the previous year. So this is our undersupply in a chart, Graeme, and we know that we've got a massive influx of demand, courtesy particularly of high levels of migration. So we did look at the other issue is that's constraining building costs, building numbers, Graeme, coming through. It's not just the planning restrictions and red tape and green tape, it's high building costs. And as we saw last week, building costs, even though they're easy, the growth rate is easy, it's still, house building costs are still rising at around about 10% per year as we speak, Graeme. So it's still quite high. It's not the 20% plus we had a year ago, but it's still quite high. And what we're seeing now is if we track building commencements, which is when the actual building commences, this is the home, these are dwellings, compared to approvals, we're now seeing that gap start to open up between approvals and commencement. So it's saying that even if you get an approval, they're not converting into the same number of commencements that we usually see. And that's because there's these lags now due to builders finding financial difficulty with getting the approval into a commencement because of high building costs. And first signs of that there, you can see just at the end of the series, Graeme, that gap opening up, the trend. But we need to keep watching that, because even with low building approval numbers, they're not even converting themselves into commencements at the levels we used to. So even those low building approvals aren't telling us the real story, which is low commencements coming through as well. So we'll watch out for that measurement, exclusive to my housing market, of course. Home loan data also came out over the past week, Graeme. Home loans, no surprise, were higher, even though overall they fell. It was owner-occupiers that were down, but investors were up and first-home buyers were also up. So owner-occupiers down by 3.5%, but investors up 2.6%, and first-home buyers increased by 0.2%. But home lending is still down 70.1% this year. That's over the first 6 months compared to the same period last year. And I do, again, am wary of this data and the building approvals data to some degree because of the seasonal adjustment problems that the ABS have, and they have admitted. But certainly, when we look at the data, we can see that there's that upswing in home lending, even though it was down slightly due to owner-occupier falls last month. You can see the upswing, which is following house price revivals, home price revivals. And you can see there that the upswing is occurring with all buyer types, with investors, the black line, the grey chart there are first home buyers, and the beige colour there are owner occupiers. So all embracing a higher activity. In fact, investors look to be doing quite well at the moment in terms of lending, Graeme. They have a stronger trend outcome compared to the other groups. And you can see that investors up the best over the month, up by 2.6%, still down 26.6% over the year. But over the full year, investors have performed the best, still down, but down by 21% over the year to June compared to the previous year. So that's our data for this week, Graeme. And as usual, we'll finish off with our weekend auction markets, which are fundamentally, I guess, the most important data that we do get in terms of real-time data, because this was, and we know that, since we've been presenting the podcast, Graeme, that this has been such a tremendous forward indicator of what's been happening generally in the market when we read the tea leaves of weekend auction results. So last weekend, of course, was the drum roll first weekend in August, Graeme. Our first weekend auction clearance rate results or auction results in the final weekend of winter. Can you believe we're now just 3 weeks away from the spring selling season, Graeme? And we're now starting to see, and we'll talk about this just at the end, some real signs that the spring market is starting, the green shoots are starting to appear. But I'm not so sure we haven't had green shoots coming through during winter anyway, because we've had a very strong winter market, Graeme, particularly July. I mean that in terms of comparative position, because winter's usually that quieter period in the market. July is usually the trough of the market. It's been the case again this year, but it's hardly moved at all down, the winter results. And last weekend, no real change. Another strong result for our auction markets. Auction numbers still high at this time of year, but down a little bit in Sydney and Melbourne compared to the weekend before, but good numbers still. And clearance rates are around about the same. Sydney up slightly from the weekend before. Another good number, 76.7%, Graeme. Weekend auction result, which is still a very good number for sellers.
And might I add, Doc, substantially higher than this time last year, both in stock volume and in percentage of clearance. Sydney and Melbourne.
Right. Absolutely. Have a look at that. Look, big numbers compared to last year for auction numbers, and big numbers for auction clearance rates compared to last year. So, absolutely, Graeme. Good.
But if anyone was waiting for the bottom of the market, Doc, I think they missed it 6 or 7 months ago.
Absolutely. In fact, they probably missed it a year ago, because they could have taken advantage, of longer term, settlements. But nonetheless, you're right. The market's bottomed out in February. But it's not about picking the market; it's about staying in the market.
In the market,
been proven yet again. So strong results there again. Melbourne and Sydney down a little bit in terms of numbers, but still quite high. And as you pointed out, Graeme, well ahead of where they were a year ago. Brisbane had a break last weekend, just a small number of auctions and a fall in the clearance rate. Adelaide strong again, volatile market in terms of the reported coming through. And Canberra's also recovered itself over the last couple of months following that Sydney market upwards, as we said it would. So these are the trends you can see. They're hardly moved, Graeme, when you look at July or August so far, which is one weekend, so be it. But you can see the markets has hardly moved through winter compared to autumn, and well ahead of a year ago in Sydney. Same story in Melbourne, hardly moved the winter market in Melbourne through July and into August, and well ahead of a year ago. Brisbane market, well, we had that one weekend, which was holiday weekend in Brisbane, down slightly or down, but we'll wait for the full results coming through over the next few weekends, but still tracking higher than where it was a year ago, Graeme. Same old in Adelaide, still high results there, and that Adelaide market keeps on keeping on regardless of the season. And Canberra, as we said, it's had a good start to August there with a clearance rate well above where it was in August last year, but it too has held its own during the winter market. So, some good results, Graeme, and you can get those auction clearance rates every Saturday night on my LinkedIn account, Dr. Andrew Wilson LinkedIn, and on Sundays we give the regional report, the national report with regional breakdowns for Sydney and Melbourne. Now, just speaking about the and that's, as we always mention, Graeme, as if you join Graeme through Infinity, you do get access to the My Housing Market house price app, which reviews all the latest asking prices and rents for every suburb in Australia, Graeme. We don't miss out any that have got any listings. They're all there, but that's something you get through Graeme exclusively through Infinity, and it's a great tool if you're looking to find out what actually prices are being asked for everywhere. It shows the median price, the high price, the low price for every suburb. It shows the number of listings, and you can also filter it for property type. So you can look for a townhouse, you can look for a house, you can look for a unit, and you can also look for the number of bedrooms, Graeme. How good is that? So you can filter it for 1 bedroom, 2 bedroom, 3 bedroom. So
doesn't get much better than that.
Available, and that's available through Graeme at Infinity, which is a unique opportunity to have a tool, a part of the tool, a primary part of a tool set when you're making your property decisions. So that's the QR code for it. But if you want access to it, you have to get the access through Graeme and his crew at Infinity. So who says there's nothing for nothing in this world, Graeme? And there it is. So next week we're going to look at the regional home prices, Graeme. Next week we'll have, which is very interesting, the wage price index data for June, which is always a bit backward looking, but still it'll be very interesting to see if we're going to get up towards 4% wages increases, because we know we've had anecdotally strong wage increases through higher inflation over over this year. Now let's see what the official data tells us in terms of where wages are going, and of course we'll have the latest weekend auction results. So I said I was going to just finish off something, Graeme, in relation to the spring selling season. This time of the year, it's always about, remember last year there was will there be a spring selling season this year? And there was, and of course it was under the weight of the higher interest rates, obviously, and a lot of negative sentiment, but it did come through. But the early signs that we do get, Graeme, at this time of the year, and it happens about the same time every year, is because at My Housing Market, we track listings on a daily basis, right? So we track the number of total listings that are coming through, new listings that are coming through every day nationally. And we've just started to pick up over the last week, Graeme, a rise in the number of new listings. Now that's comparing week-on-week listings as they're growing. So we're now seeing the first definitive signs that listings are on the rise, and we always see this early in August as people start to think about a spring marketing campaign for their homes, and this is coming through as it typically does with higher listings coming into the market. Now we don't typically see them in terms of actual properties for sale, but we do see them. What this is auctions coming through, Graeme. Those that are putting their properties up for auction over the next 6 weeks, or in 6 weeks' time, which of course brings us into the middle of September. So, spring, they're the green shoots that I'm speaking about, Graeme.
Absolutely.
And we're starting to see them now, as usual, this time of the year. So get excited, mate. Spring selling season's coming.
I think it's not coming. I think it's already here, and I think we're going to see some pretty big numbers. And all of those woe is me in the last few years and the last few months are going to be very embarrassed with their shitty forecasts.
And the point is, Graeme, getting back to what we said originally, is that buyers in the market can still buy at a discount. That's the key factor here, that prices are still below their previous peaks in Sydney and Melbourne and the other capitals, except for Perth, their previous peaks, but not for long. So you still could buy at a discount in terms of where prices have been historically, and that was March and April last year in terms of Melbourne and Sydney. But that's not going to last for long, Graeme, and I think a bit of that fear of missing out's been driving the market. I'll just finish off saying something. I did a piece for one of the TVs last weekend, Graeme, and the storyline was that there'd been a big rise in the repossession of properties in Sydney, right? In Sydney repossessions, okay? Sounds like a big rise, right? So it sounds like a hot story, right? But then the numbers came out and it was like 390 compared to 340. It's like that was the big rise. And that was the total number was, I think it was still under 400. You know how many houses there are in Sydney, Graeme?
Yeah.
And we're talking under 400 went into, and of course people get into trouble, and that happens irrespective of what's happening in the housing market. We did have higher rates last year. We had a lot of that support through COVID, the COVID support packages, they ended. So it's not unusual. Maybe some people got into trouble as a result of that, but gee, Graeme, we're talking 300 repossessions, up by about 50. Now in percentage terms, because it's a low number, it's quite a big percent. But in real terms, it's an absolute fly speck compared to the total size of the housing market. So I thought that was, again, quite instructive in terms of, how we treat our housing market.
It's a good headline, but it's not very factually scary when you look at the size of the market.
Well, it doesn't. That's right. It doesn't have a lot of it. And that's the point. And in context, higher interest rates last year, and these things take time. They're a lagging thing, of course, a repossession. And of course, we stopped the stimulus packages as well from the government through COVID. So there's a few reasons there why they might have jumped up. But gee whiz, Graeme, that's a little skinny number, isn't it?
Yep. Oh, well, Doc, look forward to next week, and you enjoy the Queensland weather without the jacket, and I'm likewise in the T-shirt today, and we'll be back next week as always.
Yeah, it's been pretty exciting doing this without my jacket, but
I bet.
I'm feeling relieved. But won't go too far with that. But it's all good up here, and certainly the weather's fabulous. But another big week in property, and we'll look at those regions next week, Graeme, which will be quite interesting to see how the regions are performing. So we give it all here, and we give it all for free.
I look forward to it, Doc, and you enjoy that Queensland sunshine.
Yes, thank you very much, Graeme. Goodbye, everybody.
Thanks, Doc.